Mutual Asset Management Portfolio Manager George Cipolloni, along with this morning Fox Business's Dagan McDowell and Fox News contributor Tammy Bruce. Great to see everybody this morning. Thank you so much for being here. George, kicking things off with you. Are you expecting a quarter-point hike from the Fed? Is it baked in? What kind of a reaction might we get from stocks when we do, in fact, get that hike later today?
Good morning, Maria. My condolences to all the Fox family. So I'm really not as concerned. I'm really not as concerned about the quarter point, or some people have speculated a 50 basis point type of move. So I think what's really important is going to be over the long term. There are seven rate hikes already baked into the cake, and if you think about it, the market really has responded already to what they are expecting from the Fed. Financial conditions have changed. Liquidity has declined. If you think about credit spreads widening and the yield curve flattening. So right now, the Fed really is in a tricky spot. And the most important thing I've seen over the last few weeks was when he testified to the Senate and when Senator Shelby asked him, are you prepared to do what it takes to tame inflation? And Powell said unequivocally, yes. So I think that really is a change in tone, and if he's really going to have to do something here and follow through with the expectations here.
Yeah, but George, is he raising rates into a slowing economy? I mean, let's face it, oil prices have zapped disposable income. We're waiting on retail sales later, but look at the price of oil this morning, under $100 a barrel yesterday for the first time since February, continuing under 100 now at 96.79 on crude, even with a gain this morning of 1/3%. This ongoing Russia-Ukraine war and new COVID lockdowns in China also sending oil prices pulling back from record highs. George, what do you make of the impact of oil on the macro story? Do you worry that the Fed is raising rates into a slowing macro story?
That certainly is a possibility. And so coming out of 2021, we started to see a lot of mentions of inflation on the calls of corporations. And last quarter, if you think about it, so in the consumer staples sector, every single CEO or management team mentioned inflation. So it was a concern coming into this year. The spike up in oil obviously complicates things. The supply chain issues complicates things. So absolutely. But again, if the Fed really wants to tamp down inflation, this is what they're going to have to do. This is the path. And so what we are seeing, obviously, and I already mentioned, was the yield curve starting to flatten. And you really don't want that to get inverted. That would be really trouble. Yeah. That would be an ominous sign in terms of the economic growth.
Well, inflation has been running at a rate of, 6, 7, 8% over the last several months. I'm looking at October 2021 at 6.25%, November 6.8%, December 7%, January 7.5%, and of course we just got the February numbers, which on the PPI was 10%. George, what about retail sales today? We are getting a retail sales report in 2.5 hours. Do you think any of this inflation cut into consumer spending and, in fact, hits retail sales in February?
Absolutely. And if you think inflation's bad for everybody, it's bad for the economy in general. It's bad for corporations, and it's really bad for consumers. And we don't want to go too far down that path. I mean, that is a troubling path. You don't want people to have to decide between gas and food, for example. And but with the price gains that we've seen, absolutely, the consumer only has a certain amount of money to spend every month, and gosh, the more you spend on gas, the less you're going to spend on discretionary items. So hopefully that does change at some point.
We'll see. Yeah, we'll see what the number is. George, good to have you this morning on a day that we got a triple-digit rally underway. Thanks so much for your insight this morning, George. Thank you, George Cipolloni.